Friday the 13th, as investors spooked on Dalal Street Markets sell off after a strong start. The Sensex sheds over 400 points and the Nifty tumbles below 8,700. Midcaps take a beating.
The security market ban on DLF and its promoters overturned. The Securities Appellate Tribunal majority decision squashes SEBI's order against the company, says it was not pragmatic. But SAT's presiding officer, Justice Devadar, dissents, says DLF is guilty of sham transactions.
Unless you make such kind of transformational changes, the big time money that you need for building India's infrastructure will move, but incrementally, not transformation.
The government's ambitious push for infrastructure has L&T's AM Naik hardly excited, says infra sector is both capital and talent starved, but he's moderately optimistic about the economy. That's the CNBC TV 18 exclusive.
After Kane Energy, the taxman wields the retrospective axe and goes after Kane India, demands over 20,000 crore rupees for alleged capital gains on transfer of shares in 2007.
The Supreme Court offers one last chance to Sahara, allows phone and computer facility in Tihar jail to Subroto Roy to strike a deal and sell his assets, threatens to appoint a receiver for the sale of hotels if Sahara fails to do so.
Trade deficit narrows to its lowest level in 17 months, comes in at just over $6.8 billion in February, thanks to lower oil imports, but exports continue to struggle.
After 9 days, total bids at the Spectrum auction continues to stand above 1 lakh crore rupees despite a marginal dip. Telcos continue to slug it out for airwaves across all bands.
Uncertainty continues for 3 coal mines won by Jindal Power, BS Ispat and Balco. The Interministerial Committee meets to decide whether to re-auction the 3 coal blocks. Coal Minister Piyush Goyal says a final decision will be taken soon.
There is nobody caught with his hand in the till, as they say, or nobody caught with a briefcase in somebody's hand.
Kumaramangalam Birla's lawyer Hari Salve speaks out against the special court summons on the coal scam, says governance will become difficult if the court starts to find fault in executive decisions.
Now what if I tell you that we do 2 out of 3 adders worldwide, 4 to 5 different types of we have about 20,000 people to come after.
We want to create thousands of job providers, not job seekers. That is the ambition.
GenNext is an organization which has provided the facilities, which has provided the infrastructure, which has brought together the venture capitalists, the mentors, to be able to, tutor and to help all of these startups.
These 2 industry giants, one is an IT powerhouse giant and one is a deep domain expertise giant in multiple areas. So you have a technology expertise and you have a domain expertise coming together.
हमारे पास सिर्फ एक आइडिया था, इनके गाइडेंस, इनके मेंटरशिप प्रोग्राम ने हमारे आइडिया को एक प्रोडक्ट बनाया.
तो वो सोच थी जो हम सोच रहे थे वो पूरी तरह उन्होंने पलट डाली और दिखाया कि एक्चुअली आपको पूरा देश के लिए सोचना है.
Well, if you're a budding entrepreneur, the time is ripe to give wings to your dreams. Tonight, we give you a sneak peek on the 11 startups that are ready to embark on their entrepreneurial journey thanks to the GenNext Innovation Hub. Good evening. Thanks very much for joining us on India Business Hour. I'm Nantara.
Good evening, Shireen. Shireen's in Bombay today. We're in New Delhi, but an action-packed day and an action-packed day for Dalal Street as well, Shireen.
Well, absolutely not a particularly good day or a great week. Volatility has been the only constant on Dalal Street this week. The market's coming under pressure once again, proving that yesterday's rally was perhaps just a flash in the pan. The Sensex lost over 400 points today, slipping further away from the 29,000 mark. The Nifty breaking below 8,700 once again. And all of this after opening for the day with some pretty solid gains. There was no place to hide. Midcaps also took a beating, losing more than 1%. And it has been a terrible week for the equities, with the index losing over 3% and midcaps losing about 1%. That's the story for the week. Anuj joins us now to wrap up the day's trading action. Anuj, thank God it's Friday, wouldn't you say?
It is Friday the 13th, and really, it came back to haunt a lot of bulls today. Clearly, some bears were waiting for this event to latch on, and that's what they did in today's trade. But clearly, the market is weak now, and what you had was a counter-trend rally for last couple of days, and that got arrested today. The market had a big gap up, and that got sold into, and that's a bit of a deja vu because even on the rate cut day, the same thing had happened. And today in the morning, the setup was good. The global markets were good. FI buying was there. The insurance bill had passed, and still you had 200-point decline for the Nifty from the highs, and you had what, 600-point decline for the Bank Nifty from the morning highs. In fact, the Bank Nifty is now down a full 10% from its all-time highs, and the Sensex, after hitting 30,000, is down exactly 5%. Let's talk about today's trade and the kind of stocks that led the market down. It was secular. So you had ICICI Bank, that was down 2.5%, Larsen & Toubro down 3%, and ITC down 2%. So three different sector stocks contributing the worst to the Nifty. On the other side, or on some losing side, you had some more stocks like Jindal Steel, Kane, Ambuja. So really, as I said, across categories, across sectors, stocks were declining in trade. One sector which had been holding out so far was pharma, and even that had a bit of a decline today. So stocks like Sun Pharma, Cipla, Dr. Reddy's, they were all lower. Some other Nifty losers in trade today included stocks like Hindustan Unilever, Reliance, and TCS. So this market didn't find any kind of hiding space in today's trade, barring a DLF, but really it doesn't make up the index. The stock was up 5% because of the SAT order, but it won't have too much of impact on the Nifty. Now let's talk about the mid-cap action, and it was a lot of high beta stocks taking it on the downside. Stocks like Unitech, Sri Renuka, JP Associates, they were all down close to about 7%. Mid-cap losers among some other stocks included stocks like IOB, Syntex, Adani Power. All these stocks were down about 5 to 6%. So as of now, it looks like the correction is well underway, and it will be interesting to see if there is some kind of panic or some kind of bottom formation in the market next week.
All right, Anis, thanks very much for joining us. Have a great weekend. Now, the pain in the equity markets was felt in the currency market as well, with the rupee weakening sharply, breaching the 63 to the dollar mark intraday after nearly 2 months. The weakness was aggravated by sustained dollar demand from importers and a firm dollar overseas. However, the rupee did manage to recover just a smidge, closing 46 paise lower at 62.96 to the dollar. What about the trade deficit data, Nandara?
Well, the Indian trade deficit in February, Shireen, narrowed to the lowest level in the last 17 months. The deficit stands at just over $6.8 billion, falling sharply by 18% when compared to last year. Lata Venkatesh now joining us with her analysis of the trade data. Lata, how good or great are those numbers?
Yes, at 6.8 billion, the February trade deficit is the lowest in 17 months. That means this is the lowest we have got since September of 2013. But September of 2013 was the immediate aftermath of the run on the rupee, where we had severe gold imports. Dollar had suddenly become as expensive as 68 rupees, and therefore people could not import anything. There was instability. If you have to compare it to February of 2015 is a normal month. If you have to compare this to a normal run rate, 6.8 billion is as low as we used to get in 2006-2007. So actually we are running at an 8-year low in trade deficit if you normalize the numbers. Is this a very good achievement? Well, only partly. The bad news is our exports is also falling because of the global downturn, especially in commodity exporting countries. Look at the export data. At 21.5 billion, it is down 15% from year-ago levels. It's also down 10% from January levels. Imports, of course, are going down. At 28 billion, it's down 15% from year-ago levels. It's also down from month-ago levels, but this is largely coming from oil imports. Oil imports are down 55% from year-ago levels. Even from January levels, they've fallen by a good 40%. That's because oil has been consistently becoming cheaper. The positive in this picture of imports is actually non-oil imports. Non-oil imports have risen by about 11.7, nearly 12%. That's good news because part of the non-oil imports is really engineering, chemicals, those which feed into industry and therefore give us the satisfaction that probably some part of Indian industry is doing better. But not all the non-oil imports is necessarily growth-oriented. As you can see, gold imports, that's gone up to nearly $2 billion and that's up 27% from a year ago levels. That's not very good news. Likewise, electronic goods, largely buying iPhones on the net or buying cheap Chinese electronic goods on the net, that's going up every month by about 30-32% in year-on-year terms. That again is not necessarily very constructive. The other bad news is that services exports have not risen very much. These are largely software exports. They've not done all that well in February. They are higher, but just by about 2% from year-ago levels. Net, this number, while it is a small trade deficit number and therefore is good news, there is a lot of bad news surrounding it, in that we have been able to achieve this low trade deficit largely because of commodity prices. If the commodity prices begin to tick up, perhaps, the gaps will start showing. So let's not celebrate our current account deficit too much. There are some weak links in these numbers.
All right, Lata, thanks very much for taking us through the trade data, the trade deficit number. Now, here's the big corporate story of the day. Real estate giant DLF lives to fight another day, and SEBI has one more battle to fight before it gets its way. The DLF stock shot up in trade today. This after a majority view from the Securities Appellate Tribunal, or SAT, which was hearing DLF's appeal against SEBI's 3-year ban, has come down in favor of the real estate company. Now, terming the SEBI order, and I quote, not pragmatic, the majority verdict allows DLF to access the primary markets. Prerna joins us now with the details. Prerna, take us through the order. It wasn't unanimous, so where does this leave things for both DLF and the market regulator?
Well, there was no unanimous decision, and this means that SEBI must now take up the matter before the Supreme Court. But before we get to that, let me take you through the opposing views. The majority view, which is the material view as far as this case is concerned, that SEBI banned the company for 3 years. Now, the majority view says that SEBI's order will be quashed, and this view argues that the regulator was not pragmatic and indulged in over-regulation. This view also held that SEBI's impugned order is faulty, irrational and unsustainable. Now, the minority view comes from the presiding officer, Justice Devdhar. His order says that DLF suppressed material facts which led to investors, losing around 7,000 to 8,000 crore rupees in just one day of trading. And also, the minority view also says that this order be stayed for another 4 weeks until the Supreme Court hears the matter. Now, most of the legal experts, we've spoken to, says that even in SAT proceedings, the majority view will prevail, even if the presiding officer's view is in the minority side. So SEBI will have to approach the Supreme Court to seek a stay on the majority view and keep the ban in force. DLF, of course, is relieved by the majority view, as Managing Director Rajiv Talwar told us earlier today.
Relief. The comments which are coming on CNBC channel offer us great hope, but we are still studying the order and only will then be able to comment on it. But we are grateful, and we always did express faith in the judicial system, and I think we live by it. I think we do have advice not only from legal quarters, but we'll also be taking advice from the banking circles and the bankers that who've been appointed. And I think it's only now, after studying the order, that one will make future plans of going ahead.
Well, that's the Group Executive Director there for DLF. This battle is far from over. It will now head to the Supreme Court, but for the day, big relief for the company and the stock reflecting that. Now, L&T Chairman A.M. Naik says the worst is over for the Indian economy, but he's only moderately optimistic. CNBC TV 18's Venika Doshi asked him about infrastructure and whether it will benefit from the budget's infrastructure fund, the railway's ambitious investment targets and more money in the hands of states. Naik's response is hardly enthusiastic.
Infrastructure fund value 20,000 crore is so little that it might be 1 or 2 projects that may be funded by that 20,000 crore. Here, let's talk about Mumbai.
Yeah.
Mumbai, we have been talking for 20 years in a harbour bridge. Right? And it hasn't come up, 20 years. Now the RFQ has started, which means the tender may come, will come rather, and hopefully it will be decided late this year or next year. That single project is worth 15,000 crore plus.
Got it.
If you look at Mumbai's coastal highway, that is worth more than 20,000 crores. Third, absolutely ambitious project, underground 72-73 kilometers of subway. And that is another 20-25,000 or more crores of project. 20,000 crore is better than not having fund at all. But what I am saying is 20,000 crore is the tip of the iceberg.
Got it. Insignificant.
The new airport, if it ever comes up, and I hope it does, of Mumbai, is another 15,000 crore minimum.
Right.
So if you add only 4 projects.
In Mumbai just in
alone,
Mumbai. It's a lakh.
1, 2, 3, 4 is 80,000 crores.
Yeah.
75, 80.
Yeah.
And if you take urban infrastructure of Mumbai, the water treatment plant, which is the minimum that you need, Mumbai alone needs more than 2 lakh crores.
Okay. So are you more enthused then by the railway capital outlay expectations over the next 5 years, or the ambition at least?
Well, it is this that after stagnation of decades, at least something is being said that we want to spend on railway modernization. And for that matter, funds are allocated. However, as I said, they are dismal, very, very poor for having one of the longest railway network
in the world. You
need more than $50 billion.
Okay, so this too is insignificant. The third bit that I spoke to you about, more money in the hands of states.
You see, my thinking comes from the fact that $1 trillion is what we have been talking for more than 5-7 years is required in 5 years' time to build India's infrastructure.
Right.
Which will be, I would say, mini scale compared to China. My point is, when I see that scale, then all of these, right, while it's a good news that something is moving, it's still a mini scale.
And through the weekend, you can catch that entire conversation with L&T's top boss. Moving on, after slapping a $1.6 billion tax notice on Kane Energy, the taxman is now going after Kane India. The Income Tax Department is demanding over 20,000 crore rupees for alleged failure to deduct withholding tax on capital gains made by its erstwhile promoter, Kane Energy. The case dates back to fiscal year 2007 when Kane Energy transferred its shares to Kane India Limited as part of an internal reorganization which ultimately led to an IPO. The move was done to facilitate, like I said, the Kane's IPO, and all of this has been rejected the tax demand and vowed to pursue all options available to protect its interests. Kane has now joined, that is Kane Energy has now joined a slew of multinational companies like Vodafone, Royal Dutch Shell, who are fighting similar cases due to retrospective tax laws. But very interestingly, our finance minister is in the United Kingdom. I'm sure this is a matter that is going to come up.
Oh, for certain. And are they going to be able to pass this off as a legacy issue? And is the UK government and UK investors going to be convinced with that argument? We're not sure, but of course we're going to be tracking that story closely. But it's day 9 of the spectrum auction. Total bids now stand at over 1 lakh crore rupees despite a marginal dip today. And surprisingly, telecom companies are still slugging it out for airwaves across all bands. Malvika joins us now with the details. Malvika, 9 days and still no dearth of demand, or so it seems.
Well, the government has so far managed to sell only about 87% of spectrum, and there is a substantial portion of the spectrum that has been put up for auction that remains unsold. So there is not excess demand in all the circles, but yes, there are some circles which have seen aggressive bidding, and bidding is continuing across spectrum bands. Remember that industry sources had indicated during the beginning of the week that probably the spectrum auction is in its last leg and would be coming to an end, but that is something that doesn't seem to be happening, and there is 800 megahertz band of spectrum that is still seeing continuous bidding from various players. To give you the exact amount, 423 crore rupees were garnered by the government at the end of day 9, and we are seeing players like Bharti Airtel, Vodafone, Idea and Reliance Communications continuously bidding for spectrum along with the other 4 players.
Okay, so it looks like this auction is going to continue for a bit longer. We're not sure how long, but it is going to continue certainly for a bit longer. Malvika, appreciate you joining us with the details on day 9. Now, the government will take the final call on the re-auction of 3 coal blocks, one by Jindal Power, BS Ispat and Balco, and that's the word coming in from Coal and Power Minister Piyush Goyal. Remember, this is a story that CNBC TV 18 had broken right here on the channel, that the government was considering whether it should re-auction those 3 coal blocks. Now, the government has held a meeting of the Inter-Ministerial Committee today to deliberate on those 3 coal mines, and the IMC is expected to submit a report soon. Post that, we understand that the government will take a final call on what it intends to do, whether it intends to re-auction or not. So the uncertainty continues.
I'm waiting for the report of the Inter-Ministerial Committee, and after that appropriate decision will be taken.
So you mentioned that some of the states have objection to the electricity bill that is there.
That's the right of every state.
What are the objections?
They have talked before the standing committee on a few things. Particularly, we have tried to say that we should allow multiple suppliers in 1 year. They are looking at a little longer time frame, but I'm open. We are open to discussions with all the states and to come to an agreed formulation.
And so there's also delay in allotment of government dispensation coal blocks, that is 43 coal blocks. There's no fresh schedule yet given by the government. Why is it so?
Well, because the coal blocks are few and the demand is too much. So we have to reconcile everybody's requirements, particularly keeping in mind what are the end-use plants that are ready, what are underway, under progress, and what are planned. So obviously it's a very, very elaborate exercise which is going through several iterations.
Piyush Goyal making it quite clear that an interministerial panel is going to decide the fate of those 3 coal blocks. Here's the latest in the Sahara case in the Supreme Court. The Apex Court pulled up the Sahara Group yet again, and today for failing to raise money to secure the release of its chief, Subrata Roy, from Tihar jail. The court has given the group an ultimatum, saying this is the final and the last chance to arrange the funds, else action will be taken. For details, let's go across to Ashmit Kumar. Ashmit, what exactly did the court say? If Sahara is unable to raise that 10,000 crore rupees initially, what is it going to do?
Well, even though Sahara continues to seek more time from the Supreme Court to rake in the requisite amount of money, the 10,000 crore rupee bail amount, Supreme Court quite visibly appears to be running out of patience. The Supreme Court has set the ground rules in very clear terms for Sahara. The Supreme Court held by way of its observations that there have been various extensions, various concessions that the Parivar has been allowed. The Supreme Court went on to add that there have been 2 very clear instances where Sahara couldn't go the distance in terms of securing a deal for raising the required amount of money. And now what the Supreme Court has done is that it has allowed what it calls one last opportunity to the Parivar to go ahead and try to raise the funds. And here's where the interesting caveat is. The Supreme Court has given an ultimatum of sorts that from this point on, if Sahara fails to raise the required amount of money, the Supreme Court will go ahead, appoint a receiver with the sole mandate of going ahead and selling Sahara's assets not just here in India but also their overseas assets, to not just meet the 10,000 crore rupee bail amount but also the overall sum that has been demanded by SEBI, that's at 37,000 crore rupees, as well as the sum that has been claimed by the IT department, that's a little north of 10,000 crore rupees. So these big figures here were thrown around today. Sahara on its part has tried to justify, saying that it is currently in negotiations with various players. Now towards that end, the Supreme Court was keen on establishing the bona fide, the credibility of these transactions, and hence has directed Sahara to provide these documents to the market regulator for further verification. We'll of course get more clarity on March 23rd. That's when the Apex Court will take up this matter for further hearing.
All right, the final chance that's what the Supreme Court has to say to Subrata Roy and the Sahara Group. Ashmit, appreciate you joining us with the details. Staying with court action, senior lawyer Harish Salve will defend Kumar Mangalam Birla in the coal mess. Salve believes that there is no case of wrongdoing and that if the court faults an executive decision taken by the Prime Minister, it could even impact the decision-making process of the current government. Listen in.
There are no allegations of any wrongdoing. There is nobody caught with his hand in the till, as they say, or nobody caught with a briefcase in somebody's hand. The allegations are all about why the Prime Minister changed the rules, as it were, and made the allocation. Hindsight will always tell you whether these decisions were right or wrong. There can be a difference of opinion on what the decision should be. Public sector versus private sector, A versus B, state A versus state B. Somebody may have a genuine difference of opinion. Sometimes the Prime Minister at his level may bypass a rule to do something which he thinks is in the larger great and good. Somebody may say, sorry, what he's doing is not in the country's interest. If you catch him accepting a bribe for doing something, surely it's extremely serious and send him to jail. But if there is no wrongdoing, to say the very fact that he departed from some rules and taking decisions is an act of corruption is a matter which the courts will have to seriously consider. Is that how we are going to construe our law? And if that is so, then I think even the present government needs to take stock of will they really be able to govern and provide the flexibility needed to give India the economic impetus which we so desperately need.
That's Harish Salve. Kumar Mangalam Birla's counsel getting set to move the Supreme Court to squash the summons issued by that special court in Shri. It's going to be very interesting to see if, we see The former Prime Minister Kumar Mangalam Birla, as well as the former Coal Secretary, all moved the Supreme Court on the same day.
I would imagine that would be the legal strategy, Nantara, but we'll have to wait to see. But I would imagine that would be the legal strategy.
There are some sources in the Supreme Court indicating that perhaps that is what we're going to see.
All right.
And here's the CNBC TV 18 exclusive. After a wait of 7 years, the insurance bill was finally passed by Parliament last night. But sources in the government tell CNBC TV 18 this is just the start of legislative action. After getting positive signals from the opposition, particularly the Congress Party, this government is quite confident the coal and mining bills will be passed by the upper house soon after the coal select panel's report is out on 18th of March, maybe even before Parliament takes a month-long recess starting 22nd of March. The government will also table the GST constitutional amendment bill post-recess in April, and once again sources indicating the government is confident that bill is going to be passed in the budget session. This confidence coming on the back of a positive dialogue with the opposition, particularly with the Congress Party.
Well, that's what we've been reporting here as well, that as far as the coal and mine bill is concerned, it seems to be a done deal. The select panel will revert with its report on the 18th, and the government is going to try and push those bills through the Rajya Sabha at least before the summer recess, and then take up the GST constitutional bill within the budget session itself. Now, after relaxing FDI norms in the construction sector, the government today clarified that no new FDI will be allowed into a construction project till the minimum capitalization norms are fulfilled. The government has also clarified on procedures related to the exit of foreign companies engaged in construction projects. Ritu joins us now with more details. So, Ritu, there are some conditions that are attached to foreign investors, both as far as entering and exiting construction projects are concerned.
DIPP has been receiving several questions from real estate developers and project developers regarding the norms of the construction FDI related rules, and the DIPP today released several clarifications. Let me start with what they have said on minimum capitalization. According to DIPP, if minimum capitalization of 5 million is not achieved within 6 months, then new FDI cannot be bought into that project. DIPP has also said that for the purpose of starting of a project, the date on which the plan gets approved, that will be regarded as the date of commencement of a project. Also, minimum capitalization will be for a project and not for a company or a group per se. Then, of course, it has talked about exit route related norms, and DIPP clarifications say that as far as ongoing projects are concerned, on that FIBB will have to be taken for the foreign partner to exit, but those will be considered on a case-to-case basis. Last but not the least, the DIPP has also said that for transfer from a non-resident to non-resident on ongoing projects, FIBB clearance will be needed. With that, it's back to you.
All right, Ritu, thanks very much for joining us with those details. That's a wrap on this edition of India Business Hour. It's been quite an action-packed week. The Rajya Sabha passing the insurance bill, but it's been a bad week for the markets. We'll pick up on all the action when we return on Monday. Till then, from the entire team, goodbye. Many thanks for watching.